Wells Fargo senior economist Sarah House joins us now. Sarah, just curious to get your reaction both to the print itself from this morning and what you just heard from Chair Powell.
Right. So in terms of the print this morning, I don't think it was quite as bad as the initial read looked. So obviously we saw it come in ahead of expectations. But when you take into account the revisions, we ended up seeing, I think, the trend more or less where we expected. So for headline PPI, it was 2.2% in line with consensus. I think it did show, though, that the next phase of the inflation fight, it is going to be harder. We're getting less goods disinflation. And at the same time, we're still seeing quite stubborn services inflation. So that was the more worrisome spot for me, is what we saw in terms of the other services. So stripping out in those goods adjacent sectors like transportation, warehousing, and trade services. So I think it's right that the Fed is taking a little bit more of a patient approach as they do seek to continue to look for that confidence.
So 3 or 4 benign inflation prints. When do you think we actually start to get them?
Well, I think we'll get a step in the right direction with tomorrow's CPI report. So we're looking for a 0.3% increase in core CPI. So that would be a step down from the 0.4% monthly prints that we saw through the first quarter. But I think in order for the Fed to be on board with a cut by September, unless you're really seeing the labor market fall apart, you're probably going to need to see something closer to 0.25s, 0.2. So again, step in the right direction, we think, for tomorrow, but it's going to take more than just a softer print in April, I think, for the Fed to regain that confidence that inflation is moving back to 2% on that sustained basis.
We are seeing some indications from CEOs during the earnings season talking about how the lower income consumer has been cutting back on spending lately in the face of these higher prices. At what threshold do you think that starts to have a meaningful impact on inflation? At what point do you see, or are you forecasting that being enough to really help bring down prices?
Yeah, so we are expecting that despite the stickiness of Q1 inflation data, that the downward trend is still in place, even if it's going to be much slower going than what we saw over the past year. And I think the fact that it is getting harder for businesses to pass on higher prices is a part of that. Is it's not just purely about the supply side help anymore, but it's also that it's getting, amid a somewhat softer demand environment, that it's getting harder to pass on prices. And we can see this already a little bit in terms of, for example, the NFIB price plans moving down on trend. And so I think that is going to help in terms of that next phase of reducing inflation. But at the same time, overall, the consumer is still doing pretty well, and that's why it's going to be slow progress overall this year.